further amplify on. 7, Chair provides amendments to the private funds. That's clause 14. Clause 15 looks at amendment of the 2nd schedule. Clause 16 looks at amendment of the 9th schedule. With a focus there or to bring large capacity buses. These are buses of over 50 seats under the corporate or turnover tax regimes. Chair, on page 8, we further amplify that the presumptive tax was introduced to target hard-to-tax segments of taxpayers. These are typically small or informal operators. However, the inclusion of large commercial buses, these are buses that are 50 seaters and above, which generate a substantial annual income above 5 million kwacha, result in revenue loss and undermines the rationale. So operators of such high-value public vehicles should be subject to either corporate income tax if the turnover is above 5 million per year, or turnover tax if less than 5 million kwacha per year, unlike being on the presumptive tax. Thought we could just amplify on that aspect. Chair, the clause 17 also is an amendment of the charging schedule, which increases the income tax, the rental income threshold to 2,500 from 1,000 per month. That's from 12,000 to 30,000 per month, and introduces a graduated rate structure of 0%, 4%, and 16% to provide relief to small-scale landlords while ensuring equity among higher income property owners. So this is one of the incentives that has been provided to cater for the small-scale landlords. Chair, the proposed amendment strengthens the equity and efficiency of the tax system by providing the targeted relief to low-income taxpayers, while it's advising also taxpayers in other strategic infrastructure projects. Chair, page 9, we cross over to Customs and Excise Act in detail, and we have the various clauses there. When we go to page 10, we continue. And I may just bring the committee's attention to clause 6, amendment of section 88C, and just to indicate that the amendment seeks to repeal section 88C of the Customs and Excise Act to align the determination of customs value of exported minerals with the new Minerals Regulation Commission Act 2024 by providing that the free on-board value for minerals shall be based on the amount certified in a mineral analysis and valuation certificate issued by the Mineral Regulations Commission. That's another key reform there we thought we could just amplify on. Chair, the other one probably is the clause 9 of a new subsections under section 82, where clause empowers the Commissioner General to suspend or withhold the payment of tax refund that is due to a taxpayer who is under investigation for possible non-compliance under any law. This is meant to safeguard revenue and is coming from a practical experience. As you are aware, Chair, we've come before your committee and shared with you the challenges we're having in VAT frauds. So we have cases where one is being investigated on the other side and being paid refunds on the other side, and then we start following them up afterwards. So we thought that this will help safeguard that dilemma in which we find ourselves as an institution. Chair, the other part, we can go to page 11, which is a continuation of subsection, continuation of clause 10. Chair, the insertion of new subsection under section 162, which we are talking about in clause 10, is intended to empower the Commissioner General to dispose of seized goods which are perishable, dangerous, or unsuitable for storage before the conclusion of an appeal. The new provision also entitles owners of the goods to be paid a refund equivalent to the value of the goods seized if the appeal is determined in their favor. Chair, we were appearing before the Public Accounts Committee yesterday, and one of the key issues that has been coming out every year is, among others, the delay in disposing of perishable goods. And you have, in some cases, perishable goods expiring because we have to follow the procedure in terms of the forfeiture process. So this will help us cure that challenge of having perishable goods expire in our custody before we dispose of them. Chair, we can go to page 12. Page 12 at a high level has got various amendments that have been made. Chapter 87 has focused on amendments related to motor vehicles, and it goes on up to page 13 affecting that various categories of motor vehicles. And they wish to report that, Chair, the amendments are intended to introduce finer classification of these vehicles based on engine capacity, to enable differentiated tax treatment, promote energy efficiency, and enhance policy targeting. This also aligns the tariff structure with international harmonized system updates, improves accuracy in trade and statistical reporting, and provides flexibility for applying specific fiscal measures or incentives to various categories of motor vehicles outlined in the submission. Looking also at page 14, which has continued on the various amendments, and going on to page 15. 15 has a focus on the amendment of the third schedule of the Customs and Excise Act, and among other aspects outlined is the introduction of specific duty rates on hybrid motor vehicles, and this is aimed at enhancing revenue predictability, ensure equitable taxation, and align the tax structure with evolving vehicle technologies. Chair, the measure is also meant to ensure that hybrid vehicles which currently face valuation challenges are properly declared, and we mitigate the risk of under-declarations. And applying the specific rates will also simplify administration, promote transparency, and ensure equal treatment with the conventional vehicles. The measure would also, Chair, support environmental and energy policy objectives by encouraging cleaner, fuel-efficient technologies while broadening the customs base in line with regional practices. Chair, we move on to page 16, which has continued with various incentives for the various measures under customs, the key one being the increase in surtax rates on various products, and this is meant to stimulate heightened domestic manufacturing and investment in the meat, dairy, and steel sectors, which will also lead to employment creation. Chair, 16 also takes us to the value addition tax, Bill number 21, Amendment Bill number 21 of 2025, where, Chair, the main issue there is to extend the authority of the minister to waive in full beyond just principal taxes, but extend to interest or penalties as outlined there. Chair, page 17 takes us to the proper transfer tax, Amendment Bill number 23 of 2025, and it has continued on to page 18, where we have amplified on the intention of the specific measures. Page 18, Chair, also takes us to the comments on the mobile money transaction levy, and we've outlined there that the amendment seeks to broaden the definition of person-to-person transfer to include a transfer of mobile money where the sender and the recipient is the same. This means that mobile money levy will be charged where a person with more than one mobile money account sends money from one account to the other. Chair, under the current practice, the levy is applied to transfers made between two accounts held by the same individual. However, the existing legal definition of a person-to-person transfer refers only to transactions made from one person to another. So this amendment simply creates this anomaly creates an inconsistency, as transfers where the initiator is both the sender and the recipient technically falls outside the current legal definition. So this amendment is meant to provide for a legal framework for the current practice. Chair, 19 continues, and it takes us to page 19. Takes us also to the proposed adjustment in the current mobile levy rates so as to enhance government revenue, as proposed in the table that is outlined. And page 19 also takes us to the betting levy bill number 31 of 2025. And Chair, the administration of the act, the clause designates the Zambia Revenue Authority as the competent authority to implement the provisions of the Act. Page 20, which is the last part, Chair, in terms of the administrative rules, the clause is intended to empower the Commissioner General of Zambia Revenue Authority to issue administrative rules concerning the keeping of books of accounts, submissions of returns, and any other matters necessary for the administration of the Act. Chair, in conclusion, the Zambia Revenue Authority is in support of the proposed amendments to the various pieces of legislation, as they are the basis on which the 2026 revenue collection targets are anchored. I will submit to your committee, Chair.
Thank you very much, CG, for that submission. Honorable members, questions? Honorable Simunji, Mtike, and Honorable Jamba in that order as the first right. Honorable Simunji.
Thank you, Chair. Sorry I came a bit late. My name is Kono Simunji, Member of Parliament for Nalikwanda. Commissioner General, my question is based on the PPP in the railway systems. I agree with you. The model is very good. The country will not lose any money in the investment. And the concessionaire will invest all the money required. Now, my question is on the tax bans which we are trying to institute. When the first 1 year, 5 years, I've got no problem. The second band, I've got no problem, because in that period, we are launching the investment, and the second one is development. Now, at the time when the investment is maturing, I expect the cash flows to be very good, and that's a time when we expect the tax to be a bit high. However, that period, the tax band is low, and it's being high in the last band, when actually the investment is being wound up by the concessionaire. I thought, in my own view, the bands are not evenly distributed. May I have your comment, sir?
Thank you. Honorable Mtike.
Thank you very much, CG. Let me just emphasize the point my colleague is putting forward, because while he may have problems, problem with the way the periods have been lumped together, because most companies by the end of 3 years they are already in operational stage, and they know that they will be sustainable or not. And I thought that these incentives that have been given are too generous. They are against your own spirit as ZRA to enhance domestic revenue collection. And also I think they are against your own principle of ensuring that the tax concessions are balanced against tax revenue. So I think that the concessions that have been, the incentives that have been given to the railway industry are really against our principle as a government to enhance domestic revenue. And my second question is related to the mobile money transaction levy, CG, because it's very possible, like most of us do, that you are one person but you have different wallets. And the current amendment on the mobile transaction levy seeks to charge a levy when I'm moving my money, for example, from my account to those wallets. I don't know whether I'm wrong, but that's what my assumption, and that's how I read the thing. That if I'm moving my money from I'm moving money from my account, for example, from my FNB to my wallet, to my mobile money account, it will attract a levy. But there's a possibility, as I think I'm not the one, that you have different wallets, and then when you move money from one wallet across to another wallet, it may attract some levy. So it brings the issue of double taxation. So I don't know whether you have enough mechanism to ensure that, as ZRA, to ensure that most of the citizens won't be subjected to double taxation. I submit, CG. Thank you very much.
Thank you. Honorable Jamba.
Thank you, Chair. CG, I take you to the amendment for the milk, the importation of milk in our country. I don't know how far, of course you can ask the people who brought this amendment, how far have we gone in producing our own local milk in terms of powdered milk or any other used to processing in the industries. I'll give you an example where people are trying to produce, say they produce biscuits. There are companies which are using this milk for a lot of products, not really just for sale directly. Now, apparently, CG, I'm a dairy farmer. The issue of milk has not risen in Zambia. We are still struggling to produce milk to satisfy the market. So what is going to happen if these people who bring milk, say for other processing processes, are barred from importing? What is going to happen? In as much as we want the market to have a lot of money, don't you think this is going to affect a lot of companies who are doing that? Thank you, Chair.
Thank you. CG, you can respond to those.
So thank you, Chair. I'll ask my colleagues to start, then I'll pick it up. Commissioner Domestic Taxes will start on the incentives for the rail sector that has been raised, and also the mobile levy. He will comment at high level, and then my colleague, Commissioner Customs, will comment on the milk industry.
Thank you, Honorable Chair, and the Honorable Members for the questions. On the issue of the incentives for the PPP, yes, indeed, what has been provided in the bill is a graduated structure where we have 0% for 5 years, then 10% for 6 to 15 years, and 12% for 16 to 25 years. When we look at what we have in the Income Tax Act, this is the first such structure that we are seeing for the PPP, because at the moment what we have for the PPPs is a period of, I just need to confirm, but about 3 years, where they pay at a lower corporate income tax rate. But just to submit, Honorable Chair, that when you look at the magnitude of the investment, again, it's the first that we are seeing. The railway investment over time has not had major investment going into this sector, and probably from the government perspective is, yes, we seem to be foregoing some tax which would have gotten if we didn't have this structure. But then, what are the benefits that will come with a revamping of the TAZARA? So, having done some cost benefit, one would conclude that the benefits far much outweigh the tax that we might forego. But just to also submit that we do have also an incentive structure for other sectors like those operating in the multi-facility economic zones. They also are graduated and they cover quite a longer period. So in comparison with the other sectors that we have, we do have those that cover quite a number of years. Then for the mobile money, indeed the clarification that the amendment seeks to make is that it wasn't clear as to whether a transfer from the one wallet held by the same person to another wallet held by the same person is not a transfer or is exempt. But this now clarifies that even transfers between a wallet held by one person to another wallet held by that same particular person will be liable to the levy. The question of double taxation, yes, it may arise, but again the intention here is to tax this sector where we seem to have a lot of economic activity taking place. So this issue of double taxation, which is about economic double taxation, can even apply to other transfers where I'm transferring from my bank account into my wallet, then to person B's wallet. It's the same stream of income, but it's undergoing this level of taxation, but it's an inevitable one because there is a bigger challenge that we want to cure, expanding the tax base and bringing the informal or untaxed sector into taxation through the imposition of the levy. I submit. Thank you.
Thank you, Chair, and thank you, Honorable, for this valid observation. We can look at this aspect in a number of fronts. First of all, of course, the intention is to stimulate production, and because of the increase attributable, which may be attributable to the rates, there could be maybe a substitution effect, maybe to local, and maybe short-term rise in the cost of the imported product, which goes into production, and subsequent downstream effect in terms of the pricing of the ultimate product. But of course, the other objective is to support domestic resource mobilization. Having said that, the comforting fact is that most of this milk is coming from the SADC and COMESA regions where there are no duties. So it might not have much effect to that extent, except for products that are coming outside these regions. So that's the comforting part. But our objective, of course, is to empower and stimulate the local production of milk. I submit.
Thank you. Thank you. Maybe just to add on to what my colleagues have submitted. So the incentive rating to the PPP in the rail sector, I think we have to look at also in the context of overall government policy, and in particular looking at the 8th National Development Plan. The 8th National Development Plan has put priority sectors. A key among these are manufacturing, mining, agriculture, and tourism. And when you look at all these sectors, particularly focus even on mining the target of 3 million tons by 2031. Agriculture, maybe maize going to 10 million tons. There's an element of logistics involved. These have to move on our roads. And do we have the capacity right now to cope with these volumes on our roads? I think, as you are aware, part of government policy is to take as much traffic off the roads as possible onto the rail. And then when you look at the rail, who is willing to invest huge amounts into the rail sector to cater for that? So we have to provide the necessary incentives, so one, to invest in the rail sector and be able to cope with the expected volumes in future that will materialize from there. So I think the context is not just look at the incentive alone, but let's look at the whole integrated framework, particularly in line with the 8th National Development Plan and the targeted sectors that government intends to promote in terms of economic development. And that's one of the issues we can just add. But like indicated by my colleagues, when you look at the M-phase also, they've got similar incentives, and when you drive to these M-phases now, you can see that activity has picked up in a number of them in terms of manufacturing. And on the milk production as well, remember the drive is also to promote, link it to this National Development Plan. Agriculture is one of the priority sector. Manufacturing is one of the priority sector. We need to start manufacturing our products as a country. Why is this being looked at? Among others, we need to leverage on the Africa Continental Free Trade area that we're getting into. We can't be a spectator in the Africa continent. We need also to produce things that we can sell to other countries. So this is the ground that the policy framework that government is promoting is looking at in terms of supporting us. But like my colleague has said, a number of the products right now, Honorable, they're coming from the SADC and COMESA region, Kenya, South Africa, and so forth, where they're already enjoying the free trade area. But it's only products outside the COMESA or SADC that will be able to expose to such high tariffs. We submit, Chair, for now.
Thank you. Maybe I've noted that Honorable Mabumba, we have one member who is participating virtually, and he has indicated that his link is a bit of a challenge. One of our members, maybe before we do follow-ups, can we allow Honorable Mabumba, are you able to get us? I saw your hand indicating to ask. It's in the village. Okay, maybe as challenges, I'll give immediate notice, then I'll interrupt so that he can ask. Honorable Smushi.
Yeah, thank you, Chair. CG, I want to take you back to the issue of the refunds and the new rule that is coming. I'm a bit setback. I hope we are not doing this because we have had challenges making refunds, and now government is trying to find a way of doing away with what we are supposed to pay to our business entities. So maybe just your comment on that. And then the next one is on the betting levy that has been introduced. I hope this time around we have done our homework, because I think this issue has been coming, it's been back and forth. And I think there's a reason why you've now moved from the 10% excise now to the levy, even though we haven't seen anywhere where you are repealing the area arrangement of the 10%. And maybe your comment on this same one. Has the industry been engaged properly, so that what we are trying to do now is not going to make us again come back with changes just within a short time? Thank you so much.
Okay. Maybe before Honorable Mumba and Honorable Nyirenda comes on the same levy, and let me read it, allow me. Section 5(2) of the bill states, let me read, says the levy shall be calculated on the gross amounts received or paid out by the betting company. The levy shall be calculated on the gross amounts received or paid out by betting company. So there are the issues where this committee would want to find the word "or" somehow creates an ambiguity, in the sense that then the questions we have is, does this mean deposit or withdraws? Because there is an aspect of the deposit and the withdraws, or it's a combination of the two. That's number one. Then number two, does this mean deposit and withdraws, which means both? And if that comes to, like, if they are both, is there for the levy at 5% or 10% if it caters for both? So maybe you may just need to clarify on the issue of the word "or", because these are the ways which will create a bit of an ambiguity. So we just wanted to enhance on that one as we respond to Honorable Simushi's question. Honorable Mumba, then Honorable Nyirenda.
Thank you, Chairperson. Good morning, ZRA. Antoine Mumba is my name, Member of Parliament for Kantanishi. First of all, ZRA would like to commend your efforts in trying to broaden the tax base. I've got two areas of concern, and maybe a comment on the last point. The first one, there is a bill here which is talking about taxing those that, maybe I can read what the notices are from the banks. All cross-border payments above $2,000 without a tax return certificate will attract a 15% deduction. So the banks are urging us to get these tax credit certificates. Now, there is a bill here meant to support this request. I wanted to find out whether ZRA, because you're now defending the money bill, you're defending the tax on mobile money, saying that it's a fertile ground for raising some resources. Now, I wanted to find out from you whether you have looked at the number of businesses that are being paid money every day, whether from the mining sector, whether from energy, that do not pay a single tax because they don't have tax clearance certificates, and these are cross-border. Because to me, this $2,000, I gave an example last time, and I brought it simplified in a home where I have money which I've already paid taxes on, comes to my account as my pay, I put it into my wife's account and I say, pay school fees for our child in South Africa or in London or whatever. So the very fact that she doesn't have a tax return certificate, you go ahead and do a surcharge of 15%. It's a good thing. But for me, my concern is when you go and sit with fellow technocrats, how do you broaden that? There are so many activities we pay for in Zambia, which I believe they are a healthy source of revenue in terms of what you're trying to apply to people in Zambia. That's number one. The number two, there is an area that under energy. What the bill is talking about and what the minister said, they are not in correlation. If you look at,
I think the minister was talking about more of generation and distribution.
But in here, you're talking about heating
And all that.
So how are you going to, which revenue? I wanted to understand maybe the revenue, maybe there's an area that you could share more light as ZRA where you have seen that it's a source of revenue, because from the speech it's generation and transmission. Then the other part is the concern that my colleague had raised in relation to milk. Honorable Chairperson, we had this case of onion, when government decided to ban importation of onion, and the price of onion skyrocketed to 200 kwacha, and since then it has never come down. So we might, if we're not careful, see a sharp increase in milk, and the price will never ever come down. Thank you.
Okay. Maybe what we do before you, because he raised quite a number with your forbearance. Okay. Your mic.
Heating of the brain. Good morning, ZRA. My name is Anyurenda Brenda, MP for Lundazi. A simple question that I have is, when we look at all these from all these adjustments, there is nothing that is going down. Everything seems to be going up, apart from maybe the issue of the electric motor vehicles, those which are hybrid, where you have said those which are hybrid are reducing from 30% and 15%. And in your submission, I see somewhere where you say revenue loss will be this, revenue loss will be this. When it comes to the issue of Tazara, you haven't indicated how much the revenue loss is going to be for that period of time. The question that I want to ask is concerning the issue of the big buses. Why I say this, it concerns me because most of the people come from Lundazi, they'll be asking for transport money there. I would want to find out, when you move these big buses from paying this tax to now under corporate or turnover tax, isn't it going to affect the prices that bus commuters are paying? I would want to know, because when you make an adjustment on one side, the other side will also be affected. And in the end, you hear no people be complaining. We are paying mobile money transaction. We try to bet they have come to get some money from us. We try this small business, ZRA is on us. And now, even transport to go to the village has been increased by ZRA. I would want a comment from that one.
Thank you.
Why are you doing this?
You can respond.
Thank you, Chair. I'll ask my colleagues to start, Commissioner Domestic Taxes and Commissioner Customs. Then I'll follow up on the comments.
Thank you, Honorable Chair, through the CG. On the issue of the betting, which has been raised as to whether we engage the industry or not, yes, there were quite a number of engagements. I do recall as ZRA, we were invited to the Minister of Finance to meet the industry. And one key submission that the industry raised related to the multiple taxes that we have that are applying. We have withholding taxes for a person who is playing the game. We also have presumptive taxes for the owners of these businesses. Then in addition now, excise was also introduced. So there was a complaint that, look, on the same money that is coming into this sector, you have all these taxes. For the player, there is withholding tax, the owners, presumptive taxes, and in addition now the duty also was introduced. So they made that strong submission. Based on what was worked out, what was settled for is what is in the bill, the 5%. As Chair indicated, under 5.2 as well as 5.1. 5.1 we have the levy, then 5.2 is speaking to the base. The levy shall be calculated on the gross amounts received and paid out by a betting company. So it will apply on both. If they receive into the betting wallet, 5%. If the betting company is paying out, 5%. So it could happen that they will actually pay 10%. But what is key to observe is that all this is being paid by the betting company. So there is now a shift from the player to the betting company. How they will do it, I think they know better as the industry experts. The question from Honorable Mumba on the advance income tax.
Maybe before you go to that, I had indicated, sorry for that. Honorable Mumba, are you able to get us now? I just want to ensure that it's done before you respond to it. Honorable Mumba?
Yes, Chair. My apology. The internet seems to be poor, Chair. Good morning.
Morning. You can go ahead.
Can I proceed under?
Yes,
Chair?
go ahead.
Oh, thank you very much. Since and your team, for me, what I wanted to find out is that as much as your direction in terms of the bigger buses, moving them from maybe presumptive tax into turnover tax and the corporate income tax is welcome. But I don't know whether you had some consultation with them so that you also understand what the challenges are, which might even impact on the proposal that you are making. For example, the ticketing system in this country is very poor. So how would you be able to ascertain with accuracy how much amount of money those 50-seater buses and above will be making? Even in terms of their expenditure patterns, do you plan to move them, all of them, to the smart invoice so that at the end of the day when they declare the expenditure, vis-a-vis their income levels, would be able to ascertain with accuracy that this is the true position of the sector? And then the second one is on the compliance. If you look at the competition in the transport sector, just going down, there is no structured taxi system. Most of the taxi operators, they are black number plates, what. So I really don't know, Chair, maybe just in summary, is as to whether we had some consultation so that we also get feedback from them so that even as you are designing this taxi system, it is both fair to the government as well as to the transport operators. I submit, Chair.
Thank you very much, Honorable Mumba, for that. In fact, it tags along with one of the questions. So as you respond, you can touch on that one. Mr. Kapasa, you are about to, you can continue.
Thank you, Honorable Chair. On the issue of the advance income tax, yes, this now has been extended to other platforms in addition to what we currently have, the banking sector. On the specific question on how we intend to broaden and whether we've considered many activities where payments are being made, like from mining companies or energy. Yes, Honorable Chair, just to submit that we have quite a number of compliance initiatives that we have been using, and one key one is the tax clearance certificate. This, we are using it as a compliance tool now because the way we've now designed it, it's in real time responding to the compliance position of the taxpayer. If you don't file a return or make a payment at a particular time, that tax clearance certificate gets invalidated. Now, effective this year, there was an amendment that was made to further include a number of institutions that will be required to request a tax clearance certificate. Before they deal with a particular supply of goods or services, they will insist on a tax clearance certificate. So the drive really is, like Honorable Mumba has mentioned, to move to all points where there is economic activity. At the moment, the big mining companies, we have a good working relationship where they are giving us data about their suppliers. Before they pay the suppliers, and after they pay, they will share with us the information. And we are exploring smarter ways of how we can exchange that data through interfaces. Similarly, for government also, through the IFMIS, that information is given. But the key strategic drive for us as Zambia Revenue Authority is to move to every point where there is economic activity. We must have sight of those transactions. For those making payments outside the cross-border, again, it's a key requirement because we have quite an elaborate withholding tax mechanism which imposes tax on most of the payments that go outside. And the requirement is that any person making such a payment must withhold the tax. The issue of the buses, the big buses as prescribed are moving to corporate income tax or turnover tax depending on the threshold. Let me pick the corporate income tax. Actually, by moving from presumptive tax to a corporate income tax, these operators now are moving to a tax system that is more fair or equitable, because under corporate income tax, you only pay that which you are able to and which is according to your capacity. Remember, for us, the corporate income tax, the structure is that we tax on net. We will allow you to remove all the expenses for the fuel, for the spares, and what remains is what we will charge the tax on. So the fear of them increasing fares if they move to corporate income tax, I think that one may be mitigated because they are now moving to a more fairer tax system, the way they used to be a long time ago. For turnover tax, again at the threshold of 5 million, this compares well with the current presumptive tax rates that we have. So they should be able to operate normally the way they've been doing. I wish to submit. Thank you.
Okay. Thank you, Honorable Member, for that question regarding, I think in general, a number of increments that have been suggested here, and more specifically to the milk. Maybe just to give a general broad status of the tax base on importations, about 75% of the values or importations are not taxed. Then about only 25, the revenue on the base is upon of the value, total value is about 25%. So there is room to extend looking at revenue mobilization requirements for the country. But as area indicated, there could be initial increase while the maybe economic players are trying to realign their resourcing. But by far and large, most of the importations are coming from the region, as I indicated, COMESA and SADC. And maybe also there's that already indicated objective of trying to strengthen intra-Africa trade through even the Africa Continental Free Trade Area. So as they adjust, but the long term of this incentive is likely to lead to lower prices because of the increase in production, because of the investment incentive that is being promoted here. I submit, CJ.
No, okay, CG. I'll come back. You can just continue, CG.
Okay, thank you, Chair. So I will start with Honorable Simoshi's questions on the refunds. Like we stated earlier on, the challenge we have at the moment is that we are in an environment where we are still highly exposed to tax frauds of the different kinds, including VAT frauds. Now we have situations where one is under an active investigations. Meanwhile, on the other side, they're being paid refunds. And later on, when we issue our assessments, we have to go back now and start claiming back the refund we had paid. So to avoid that situation, we are making this proposal that when there's an investigation that has been triggered on a taxpayer, we should temporarily hold on to the refund until the outcome of the investigation is known. That's when we'll conclude with the payment of the refund. And it gives that legal framework now to show the basis on which we've held on to the refund, and gives predictability of the taxpayer. Because when taxpayer is under investigation, they also called for interviews and so forth. Then they will know that I'm not being paid because of this pending issue. Not necessarily to run away from the refunds. I think we've demonstrated high-level commitment to dismantle the refunds. We've moved from paying 800 million kwacha per year to 1.3 billion per month, 800 million kwacha per month to 1.3 billion kwacha per month. Last year we moved to 1.7 billion per month. Right now we're paying 2.2 billion every month. So that shows that we're really committed to dismantling the refunds. On the other questions that have been raised, Chair, the key issue we'd want to draw your attention, honorable members, is to the domestic resource mobilization general policy that the government has been setting. It has focused mainly on ensuring we improve administrative efficiency of ZRA, we seal the revenue leakages, and also we expand the tax base. So all this growth you've been seeing, where the expected contribution of the Zambia Revenue Authority to the national budget has increased from 49%. 2021, remember, 49%. 2022 we moved to 53%. 2023 we moved to 62%. 2024 70%. This year almost 72%. All this growth is anchored on these fundamental pillars. We have to improve administrative efficiency, seal the revenue leakages, and expand the tax base. Hence the various reforms that are taking place. And I'm sure from policymakers' perspective, you can also see that the official development assistance landscape is decreasing. Donors are cutting back. We can see that the issues of debt sustainability is a topical issue. We need to manage this debt. So the only fallback is for us to seal the revenue leakages, expand the tax base, improve so that we generate enough resources domestically. And this is what the policies have focused on. Now, honorable members' questions, particularly on all these aspects of where we need the tax clearance certificates, transferring money, there are all these cross-border transactions, and the fundamental issue, like my colleague has indicated, is that part of the weakness we have in our administrative operations of ZRA is that, first of all, ZRA is in a silo, has been in a silo for a long time, meaning that a transaction that involves taxes can take place in the economy, even without ZRA knowing. That's how bad the situation has been. So the whole issue is to make sure that where a transaction that is of interest to the revenue authority takes place, ZRA must be there. Or the income tax provide for that, but the challenge has been the implementation modalities. You know, when you're applying for power connection, when changing property, when now we've extended, when opening a bank account, you need a tip in all those transactions. But the means to implement, I think that's what has been lacking for many years. But that's what we are delivering on now, using technology to see, can we have a presence at all these transaction points? Because that's where the informal, for lack of a better term, honorable members, what we normally call as informal sector, most of them are only informal to ZRA. They are formal out there. Formal businesses well registered with the PACRA and other institutions, formal businesses bidding for jobs out there, formal businesses being paid into bank accounts with formal institutions. At individual level, these are individuals with a formal identity. They have an NRI, they have a mobile money account with a formal institution, but when it comes to taxes, they're informal. So the strategy is to look at what point can the informal interact with the formal ZRA. And that's why you see us getting into all these spaces now to ensure that we are able to close the loopholes. And it's not something peculiar to Zambia. Our friends look at South Africa where they've advanced all these things. You buy a Porsche motor vehicle there, SARS will know that you did something. You bought a car here. Why? They've integrated the economy. They've integrated the tax administration to the whole ecosystem. So this is where we are going, and that's what we should do as a country if we're to mobilize revenue for ourselves to run the economy. So that's what I wanted to amplify on these particular aspects. On the buses, I think we are looking at it in the broader context. Look at the equity also in issues of paying taxes. The buses, a 50-seater bus, do you know how much taxes we're paying? 12,960 per bus per year. That big bus, they are paying only 12,960. Is that equitable contribution to the tax system in the country? For a big bus, looking at the money that, in fact, that's just maybe 10 or 20 passengers on one trip. They cover the whole cost. And there's nothing else to pay. So we are saying that the new model, they must come on an equitable platform where they're equally contributing to the tax framework in the country. I think that's the whole rationale behind this proposal. And it has taken into account also the lower categories, you know, the lower categories of buses, the issues Honorable Maumba was raising, the taxes, and the taxi drivers, those have not been touched. We said for now, let them continue in this platform. But at least at a minimum, for the big buses, let them at least have a fair and equitable contribution to the tax environment. I submit for now, Chair. Thank you.
Thank you. CG, let's go back to the issue of the powdered milk. If you look at the motive for that increase from, is it 15% to 25%, is that we want to protect the local industry, and this is the dairy industry, isn't it? And I'm happy that within your team here you have people like Mr. Piri, who is in charge of research. I'm not saying he should have done that, but in a nutshell, the question which we want to find out is, currently, do we have sufficient milk? Because we want to protect. For us, that's the argument by the ministry, to say the intention is to protect the local industry. But the question that which we have is, do we have currently sufficient milk to take care of all that which is needed? And then the second one is, I think also is issues of ambiguities again, because powdered milk is can be used also for manufacturing, you know, for value addition, if I was to use that term. As it comes in, some is used for manufacturing in terms of value addition, some basically they will reconstitute direct for sale. Now that 25% is for both, for those who are importing for value addition, or there are those who are basically importing so that then they can, what we call it, pasteurization, and reconstitute it so that you form now the actual milk for sale. And this is where we wanted the credit. But the key issue is we don't want to have a situation whereby we trigger in something, and then at the end of the day you find that because of that we affect the industry, because, you know, we need, as you indicated, we need to raise money from the manufacturing industry. It's through the value addition and the like. So, but the key component is, do we have sufficient milk in the country now? Because that is the argument by the ministry to say the reason why we are doing this is we wanted to protect the local industry. Maybe before we proceed, I think, why do you want to add when you ask the questions? I think it's very clear. So let's get the response on this one so that we move to the others. CJ, are you able to respond to that one?
Thank you, Chair. I know that it's an item that, a product also that is consumed by a number of people. And usually the policy formulators there's a process that the team goes through before making such a recommendation. I'll ask Mr. Piri, because he's part of the tax policy review committee, what input they had, both from the industry and feedback in terms of the submission, and then I'll comment on that at a high level.
Thank you, Seji. So, in terms of the process, the proposal came from the industry, and then the way we do it at Tax Policy Review Committee is the competent authority on this is Ministry of Commerce. So they gave us numbers in terms of what the likely effect would be. So in terms of what their opinion was, is that it would not, it's unlikely that this measure would create a shortage. So we relied on that particular submission from Ministry of Commerce, who were like the competent authority on this. But obviously, policy being what it is, there could be these issues that unanticipated consequences that might arise. That's why sometimes you would come back to seek for policy adjustment. But that was really the process, and I think the numbers were looked at in terms of what the industry produces, because that was where the proposal came from. I submit.
Just by way of comment, you know, I think about 2 weeks ago we saw, it's there in the media where the minister in charge of livestock, no, not agriculture, livestock, where he is lamenting that there is no sufficient milk in the country now, but Minister of Commerce. Anyway, that's just as a by way of comment, but I see an emphasis from Honorable Mutike wanting to ask Honorable Mutike. Your mic.
Thank you, Chair. You've distracted me because you know I love milk a lot. Yeah, but what I wanted to emphasize is that the industry, they are saying that for processors, they need to import outside the region because there's not enough within the SADC. They need to import outside within the region. So this 25% will definitely be applicable to them. And then they keep saying that it will also be cheaper if we do that, to import finished product from outside that region rather than processing locally. But this is the issue that is at hand, because we want to stimulate local production. But it looks in this case that it will be the vice versa that we want to do. And then they claim that we are now going to force this to be, South Africa and Zimbabwe to be to take advantage of this thing. So I was still thinking that maybe we need to look further into this and see how we can balance the issues. Thank you.
Thank you. Honorable Simunji, you had your mic, Honorable Mutike.
Oh, yeah.
I know they will respond as you.
Chair, it's a right on the Honorable Simunji's question. Where the stakeholders were getting worried with, because of when there's a claim for a refund.
That's now a different one, isn't it, from that? Okay.
Yes, where there's a claim for a refund, then our colleagues from the ZRI institute an investigation just to try to avoid making a refund. I'm sure that was the question.
You get that one, CG? Okay. Any other questions, Honorable Jamba? As we wind it, I have a bit of questions also.
Chair, CG, the technocrat, which one you are giving to answer when he was answering, he was speaking very good English, which sometimes the ordinary person cannot even understand what he was trying to bring the balances to. The simple, straightforward issue which we are talking about in terms of milk, without the jargon of the English and the whatever, is that the supply on the market from the farmers, me, I'm a dairy farmer, I've told you, I declare interest on that. The milk, there is no enough milk on the market. And in any case, how many processing companies do you have who are processing milk from just ordinary milk as it is gotten from the farmer into powdered milk so that people can say use for biscuits or use for sweets? How many of those are there? So this issue, you know what is actually happening is very funny. Yesterday we were telling ZRA.
What is ZRA?
Minister of Finance. You want to start something, we advise you, this thing has got repercussions. There is so much adamance from their this ministry that they go ahead. Just 1 month later, they come back. Look at the betting. They go, we advised, please, the industry is talking about this. What do? They go ahead, now they come back in another form. Now you can tell that in terms of consistency, we are not being consistent in what we are doing. This levy you are talking about, if you remember, 2019, 20 whatever, this thing was brought so that we could actually enhance the production of milk. What happened? Just by the end of the year, the thing was reversed back. There is no milk production. If anything, I was thinking the government or the Minister of Finance would enhance the idea of bringing more cattle in the country, trying to increase the production. How can we do that so that instead of talking about milk which is not here, relying on milk in Zimbabwe, South Africa, or Uganda, we rely on our local milk? This CG is going to affect us.
Okay. Honorable Mumba, then Honorable Smush in that order as we wind down.
Thank you, Chairperson. I just want ZRA to help me understand, because I'll go back to the same question I asked. CG, what is going through my mind is you have proposed 2,000 and above, okay, for cross-border. If I take Ministry of Health and we buy drugs from a company in Egypt, $100 million. I take Ministry of Defense, we are buying spare parts from a company from Israel, millions of dollars. I take you to mines. They are trying to buy bricks from Denmark, or they are buying this equipment. All these companies I'm talking about don't have any presence in Zambia, but they do have the product that is needed here. Now, if you sit with your technocrats and think about it, that's an area where you can raise a lot of money. Okay? Not necessarily at 15%. Can be a windfall of even 3%, even 5%. Because remember, if you look at a business in Zambia, if I walk to FNB or Stanbic, I'll be getting if I want to get a finance to say a tender I've won within Zambia, I'm getting 28%, 30% interest. Okay, that's on top of my profit. Maybe my profit will be 12%, which you're going to tax at every level and any opportunity. I wanted to understand if it would be wrong to suggest that you look at that as a possible area of revenue. But that's one.
Okay.
Then two, I just want a clarification. Remember, on the electricity part, the electricity subsector, because the electricity subsector, remember, the minister is talking about transmission and distribution. What came to my mind when he was talking about that was to try and encourage companies to start, because ZESCO at the moment does not have finance, to start importing power and create like an electricity bank, and then they're able to either sell it to Congo or even to the local companies here. But what's in the bill is something else. So I wanted to understand how are they going to make money from what is in the bill?
In the bill.
Yes.
Okay. Sid, you can respond to those. What don't Honorable
Maybe on that issue, can just take us to the specific item on the bill you're referring to on electricity.
I need to check on that one.
Where is that?
Okay, well, as you respond to the others, maybe let's try to check.
Thank you. So, Chair, we'll start with the Commissioner. We'll make some comments, and then I'll pick it up from there.
Okay.
Thank you, Honorable Chair, through the CG. The issue of exploring the possibility of introducing some tax, like on the procurements by means of health, defense,
or just general business?
General business.
Don't look at it specific. Just general business.
Thank you. So, for general business, the way it works is that if a Zambian business is procuring, say, goods, those goods will come, they will be recorded, it's a cost of sale, and we'll be able to now monitor now what will come out of what they have bought. They will be making sales. And depending on where they fall, if it's corporate income tax, we'll get the corporate income tax. If it's turnover tax, we'll again tax. But imposing a straight tax on the money going out to go and procure goods that will come and resell, that is not usually the standard practice. But when it comes to services, it's different. If a Zambian business is procuring services, contracting a consultant to come and assist maybe in the installation of maybe a plant or any works, there are taxes that we charge. We even have reverse VAT. If a foreign company is offering a service here, we will collect the reverse VAT. They will be required to appoint an agent to compute the tax on that. So whatever outflow is going out of Zambia, there is a treatment that we give. We collect the withholding taxes. We do also collect the VAT now, because on non-resident service providers of electronic services, we are now able to collect the VAT, which we are calling the cross-border electronic service VAT. But the examples, Honorable, you gave, although you allowed me not to restrict to them, these are non-profit-making institutions. This is government, so for whatever they are procuring, we don't charge any taxes. But should they hire a service provider, an expert, to come and render any service, because now this non-resident is rendering a service or carrying on business here, taxes will follow on the incomes that they are deriving. I submit.
Thank you. I will respond on the questions that have been raised on the rationale for putting on hold the payment of refund while under investigations. We wouldn't take that punitive measures on our taxpayers. Say that because we don't want to pay you taxes, therefore we'll put you on the list. I think that would be highly unethical on our part to do such a thing. But Chair, we've come before your committee on a number of times and specifically mentioned that this country is highly susceptible. It's highly, in terms of one of the major revenue leakages we have is a practice called VAT fraud, where a number of the claims for VAT refunds that we have, some of them are not genuine. There are double claims being made. There are claims on goods that were never supplied, claims using forged invoices and so forth. So these are practical things, practical challenges that we have. And the taxpayers, some of them, they have the audacity of highly demanding for payment of a refund. Meanwhile, it's on fraudulent claims. You know, and when we stood, and then there's an active investigation going on. And they will even write, there are even lawyers who write that, no, I'll pay our client, even if you are investigating them. So this will give us now that leeway to say, no, according to the law, let's wait for the investigation, then we'll pay you. We have no problem with that. So we can't pay someone and later on we issue an assessment to say, no, bring back that money because it was fraudulently paid to you. So those are the practical situations that we want to mitigate with this measure. And then on the issue of the milk, we've taken note the submission from the honourable members, and as you've seen, it's not a revenue measure where we're saying no, we want to raise more money as ZRA. You can see clearly that it's a measure with the intention of supporting domestic industry development, and like my colleague has indicated, the sponsors of these are not direct from ZRA. So it may be not advising the committee, but maybe it may be supportive of your input to consider calling the sponsors of this measure so that they're able to justify why we need such a measure for the country. Maybe that may assist in terms of clarifying and addressing the issues that you've raised. Yeah. Then on the issues Honorable Mumba has raised, my colleagues has ably tackled the matters, but I think the key issue to take into account, first of all, including from the advance income tax, like the name suggests, it's not our intention to raise money from that. If we collect zero, it means that everyone who's sending money out, they're tax compliant. That's what we want to achieve. So it's not a revenue raising measure per se, or it's a compliance check. Are you sending money outside above $2,000? Is this money coming from a source which is tax compliant? If it ticks the boxes, well and good, it goes. And remember, this measure has been on operation from January this year through the banking system. The first 3 months of the year, we had a lot of cases coming up, but later on people knew that this is a compliance requirement, and now they are complying. Even the has really gone that would really want in terms of having it implemented. I submit, Chair.
Thank you. Just as we close, Honorable Zimushi. Okay, I can still curtail as a chair, but you can go ahead and ask a question.
You want to rig? Thank you, Chair. I think CG, we are as a country struggling with the issue of enhancing and widening the tax base. Now, there's something that you mentioned that I think has surprised me a bit. You are talking about the buses, big buses, and how they've been paying less in terms of tax. And I think then this has been happening for a long time. So what I'm trying to find out is, as technocrats, have we sat down and looked at the tax enhancing measures that we can do as we try to widen even also on the widening of the tax base? Do we have a schedule of areas where we know if we do this, we'll be able to enhance our revenue collections? Or these things just come as when we think about them? Thank you so much.
Okay, so as you respond to that one, also the other one is just a quick one. Mobile money levy. There are instances where people transfer money from the bank to the mobile accounts. And is that also going to attract a charge? Where you're transferring from a bank account to your personal mobile money. We just wanted to find out whether that also is going to attract a levy on it. Then also, there's another component, CG, under now where you find a taxpayer can make an appeal within the 30 days. It's allowable, which is a good thing where you have allowed the taxpayers to make an appeal within 30 days. And then we have noted also that once that appeal is done, ZRA is supposed to respond within 60 days. You're aware of that, where it says if a taxpayer appeals, is allowed within that 30 days. In fact, further, you have also indicated someone can write to say even after the 30 days you still allow, but it's your response to the appeal which takes about 60 days. We just wanted to find out the rationale. We were thinking now we needed to start reducing in terms of extinguishing such kind of cases. Why do you want to give yourself 60 days? Maybe you can respond to those two, and then the last one is on the perishables, and where you are disposing of the perishables and all that dangerous goods and the like. And it's good also have indicated that where it is found that a refund is needed for a taxpayer, that refund will be given. But what we thought also you needed also to also start thinking of putting in time frames. If you finish today, in terms of you are satisfied that a refund is due, how long does it take? Because those are the complaints from taxpayers. Just like the withholding tax, we're talking about mobile money, we had already concerns whereby someone is supposed to be given a refund, and then it takes long for that person to receive because there are gaps. We don't have time frames for such. So maybe we can respond to those and then we close.
Thank you. Chair, on the perishables, we've taken note, but just to amplify that, we have the service level standards, okay, and the timeframes within which we have to pay out a refund, so we can operate. In fact, our goal is to strive to operate within the timeframes as specified in the service level standards. and you can see all the effort, including on payment of refunds, is going towards making sure that we stick to the service level standards. Including on issues of appeal, but appeal for number of days, we need to take into account some complexities that sometimes arise in the background. At times we have to also engage other third-party institutions. We may have to consult Attorney General, consult other offices, hence catering for instances where we need to engage other third parties on the matter. On the tax policies, Honorable Smushi, they are not necessarily ad hoc policies. That's why we have, for example, the 8th National Development Plan. What does it state in terms of domestic resource mobilization plans in there and so forth? So a number of items are picked from there, but of course there are others that come in an ad hoc basis and so forth. But the key assurance, I think, if you look at this year, when you read the minister's speech, he did indicate in the speech that there will be a medium-term revenue strategy, MTRS, that will be developed, meaning that there will be a strategy now developed for a longer period to say these are the goals we need to, these are our plans in terms of revenue mobilizations and the activities that we intend to implement. So we will need your input and support to look at the medium-term revenue strategy when it's developed, because that's now the document that will guide in terms of the policies that will follow in the coming years. I submit, Chair. Thank you.
The mobile money one?
The mobile money, do you have a response?
It's exempt. That transaction is exempt.
It's exempt, yes, from the bank to
from the bank to mobile,
okay.
Yes.
Okay.
It's an exempt.
Okay.
transaction.
Thank you.
Thank you. We submit, Chair.
Thank you. Honourable members, we have to end here. We have kept the CG for a long time. I know you saw our indication for further questions, but we have another witness waiting, which we have kept for almost 30 minutes. CG and team, thank you very much for appearing before this committee. We do appreciate and we engage. As you indicated, I think we need to call the Minister of Commerce for us to reinforce on that one. So in terms of the provisions, Cap 12 of the laws of Zambia, the immunity, that which was granted earlier on to you, also end here. So I didn't, I'm announcing at the end that in fact we were live both on TV and
Thank you, Chair. Good morning, witness. My name is David Mwengwe. I'm Parliamentary Counsel for Ministry of Justice.
Good morning once again, Chairperson, Dr. Mwale and your team. Good morning. I am Chirimboy Elijah from the Office of the Clerk of National Assembly, privileged to manage the Committee on Education, Science and Technology. Thank you, Chair.
You may go ahead.
Thank you, Chair. Bishop Dr. Fred Mwale, currently Acting Registrar, but Director, Registration and Standards at the Council. I think I've come with the team to introduce themselves.
Good morning, Chair. I'm Beatrice Luhanga, Director Finance, Teaching Council of Zambia. Thank you.
Good morning, Chair. Good morning, Honorables. I am Patrick Chabu, Regulations and Compliance Officer, Teaching Council.
Okay. Good morning, Chair. I am Stephen Mumbi, the Legal Officer of the Teaching Council of Zambia. Thank you.
Good morning, Chair, and good morning, Honorable Members. Mutambo Faitwa is my name, Director, Regulation and Compliance, Teaching Council of Zambia.
Okay. And my name's Harry Kamboni, Member of Parliament for Karomo Central and the Chair of this committee, courtesy of my honorable members. As you are here, this is a main Parliament. I'm now therefore giving you Cap 12, which gives you the immunity so that you are not taken to court for as long as what you are telling us is the truth. But the same Cap 12, if you don't tell us the truth, can also sometimes tie you. You will take us through your paper, preferably 15 minutes or so, and then members of Parliament will seek clarification or ask questions.
Thank you.
Thank you, Chair, for this opportunity we have to appear before the committee to discuss on the matters that are on our table. I think with the paper that is before you, this report is a justification on the proposed repeal and replacement of the Teaching Profession Act number 5 of 2013. The proposal responds to a request from the National Assembly to review the current law in line with the evolving needs of the education sector. So the Teaching Profession Act is a critical legislative instrument that governs the registration, certification, professional conduct of teachers in Zambia. The background is that the Teaching Profession Act number 5 of 2013 was enacted to regulate the teaching profession, to operationalize it through the establishment of the Teaching Council of Zambia, which was done in February 2015. The key provisions of the legislature are the mandate of the council to register teachers and generate what is called the National Register of Registered Teachers. The issuance and renewal of practicing certificates every 3-year cycle upon the payment of a prescribed fee. Establishment of the Teaching Council of Zambia as a regulatory authority. Chair, while the Act laid a solid foundation for the regulation of the teaching profession, several implications, challenges emerged during the time we have operated. I think now this should be about the 10th year. And some of these that are emerging, one was inflexibility in fee payment methods, with most teachers preferring the payroll management control deductions. The other challenge was difficulties in financial reconciliation during audits due to the 3-year cycle. That is, the 3-year cycle presented some financial audit reconciliations. The other challenge was the fragmented disciplinary structures for the public and private sector. And the other one was the need to strengthen the quality assurance mechanisms in teacher certification. What was the rationale? The rationale to repeal and replace the Act is necessitated by the following factors. One, modernization of the professional standards. That is, to introduce licensure examinations as a tool for ensuring competence and accountability among its teachers. Second is regulatory efficiency. To enhance regulatory efficiency, it is proposed that the license renewal process be simplified by enabling automated deductions through the payroll management control system. And the current Teaching Profession Act number 5 provides for a 3-year cycle for the renewal of the practicing certificate upon payment of a prescribed fee. However, this payment arrangement has posed challenges for many teachers who prefer the more convenient methods such as the payment deductions. Additionally, the 3-year payment cycle complicates the reconciliation of financial statements during audits conducted by the Office of the Auditor General. It is therefore necessary to repeal the replacement of the Teaching Profession Act to allow for the issuance, renewal of practicing certificates through the payment deductions, and therefore improving compliance, transparency, and administrative efficiency. The other rationale was alignment with government policy to reduce the number of the council members from 14 to 9, and this is in line with the revised guidelines on governance of structures. The other aspect is the unification of the disciplinary processes. To harmonize disciplinary procedures for addressing teacher misconduct across the public and the private sectors. Currently, the Teaching Profession Act establishes 2 parallel discipline structures. Teachers in the private sector are disciplined by the Disciplinary Committee of the Teaching Council, while those in the public sector fall under the jurisdiction of the Teaching Service Commission. This dual structure has created inconsistencies and hinder the comprehensive enforcement of the teacher professionalism. Therefore, the proposed bill seeks to establish a unified disciplinary framework applicable to all teachers regardless of the sector where they're working from. This will enhance professionalism, ensure uniform application of the Teachers' Code of Ethics, and strengthen the regulatory role of the Teaching Council of Zambia. It is therefore necessary to repeal and replace the current act to provide for a single, streamlined disciplinary structure capable of addressing all the matters related to teacher conduct and ethics across the profession. The other aspect is compliance with the higher education reforms. Following the Higher Education Amendment Act number 23 of 2021, accreditation of teacher education colleges shifted to higher education. This necessitated a revision of roles and the quality assurance mechanisms. The proposed changes. 1. The proposed bill introduces the following amendments. 1. Automated license renewal. Provision for practicing license renewal through payment deductions and flexible payment modes, and the reduction into the one year from 3 year to 1 year cycle. Licensure exams. To enhance quality assurance and uphold professional standards in the teaching profession, the introduction of licensure examinations is proposed. These exams will assess the teacher competencies prior to full registration and serve as a rigorous mechanism to evaluate the comprehensive knowledge, skills, pedagogical readiness of the aspiring teacher. This innovation is aimed at strengthening teacher professionalism, promoting accountability, ultimately improving teacher-learner outcomes. It will also ensure that the recruitment and selection processes prioritize candidates who demonstrate the requisite competencies and potentials to excel in the teaching profession. Chair, you allow me to add on to this one that the licensure exam is mainly going to target those that are entering into the profession, assessing their professional competencies at the entrance. Currently, there are 2 documents in the Ministry of Education. It's called the Standards of Practice for the teachers in Zambia and the Teacher Professional Development Index. In those 2 documents, the standards and the competencies are laid down of what is expected of a teacher. So the licensure exam is going to be one of those tools to help us assess the teacher as he enters the profession, whether he has the standards and the competencies that are needed to be effective as a teacher. So the need for licensure exam has been further underscored by the enactment of the Higher Education Act number 3 of 2013, which has transferred the mandate of accrediting colleges of education from the Teaching Council to the Higher Education. As such, licensure examinations will help bridge the quality assurance gap and reinforce the integrity of the teacher processing. The other change it proposes is the council composition. Reduction of the members of the council from 14 to 9. This is to comply with the current government policy on the government body's composition. The other proposed change it seeks, Chair, is unified disciplinary framework. Establishment of a single disciplinary structure covering both public and private sector teachers. That's what it seeks to establish. The other aspect is to enhance the mandate of the council. Clearer powers of the council to establish, monitor, enforce professional standards through the Code of Ethics. The bill is aligned with the national and sectorial policies. The amendment aligns with the Zambia's broader development and educational goals, those that are stipulated in the Teaching Education Act, which enhances the functions within the system, the Vision 2030, which supports professional excellence in public service delivery, the 8th National Development Plan that promotes human capital development through education sector reforms, education sector strategic plan that reinforces quality teaching and learning outcomes, and international frameworks that aligns with the global standards such as the UNESCO Teacher Policy Development Guidelines. Chair, on stakeholder consultations. Extensive consultations were conducted with the key stakeholders, including governmental ministries, education bodies, and we got a feedback from them. I think the bodies that were involved in the consultative process were like ZACWA was involved, HEA, Examination Council Zambia, several NGOs and civil society buildings, civil society organizations, teacher unions. I think teacher unions, we even had a separate meeting specifically where they laid down their own inputs into the, and then we also had teachers. Teachers, we made them in the provincial meetings. We had provincial meetings where cross-section of teachers contributed. Supportive ministries that were consulted were ministers responsible for defense, finance, energy, health, education, labor, information, endorse the changes. We had also conditional support from Home Affairs and Return Security that supported the bill, but requested that there should be a clarification on distinction between licensing and practicing certificate. However, there are also some ministers who did not comment. These were Foreign Affairs, Commerce, Local Government, and did not provide input by the report deadline. Key observations that came from the consultations was that there should be harmonization of the discipline frameworks was strongly supported. The support for the introduction of the licensure exams was widespread. The inclusion of PEMIC as a renewal mechanism was also seen as a practical innovation. In summary, the consultations reflect overwhelming support across ministries to repeal and replace the current Teaching Profession Act. The feedback obtained will be considered in finalizing proposed bills to ensure its comprehensive alignment with policy directions and promote a high standard of professionalism in the teaching service. Implications of the bill. Once enacted, the new legislation will have the following implications. 1. Improved license renewal process. Teachers will experience a streamlined, predictable, and renewal system. The other implication is a unified discipline system. A single framework will enhance consistency in addressing teacher misconduct. Professional accountability. Licensure exams will promote a merit-based entry and progression into the profession, especially looking at the foundational competencies that the teachers will need at entry point. To also enhance council governance, a leaner and more focused council will strengthen oversight and decision making. Improved quality of teaching. The bill will contribute to better learner outcomes through competent and accountable teaching staff. In conclusion, Chair, the proposed bill represents a progressive step towards strengthening the regulation of the teaching profession. By addressing systematic inefficiencies, improving professional standards, and aligning the Act with the current policy and legal frameworks, the Ministry of Education affirms its commitment to ensure quality education delivery in Zambia. The Ministry stands ready to support enactment and implementing of the proposed bill. I submit, Chair.
Thank you very much, honorable members. You may now ask questions or seek clarifications. I'll ask you to note the questions so that then you can answer them at your Honorable Banda.
Thank you very much, Chairperson. I'm interested in the licensure examinations. People are asking, they want to know the content of the examination, they want to know who's going to prepare the examination, they want to know the structure, and they also want to know how many times one can attempt in case they fail. Honorable Chairperson, thank you.
Thank you very much. Honorable Sumuzingiri.
Thank you, Chair. Thank you, Teaching Council, for a very good presentation. I note your submission that you have now a streamlined disciplinary framework